in some sense, Bitcoin has created a $3 trillion crypto market that also, by the way, is inflationary because it's $3 trillion of moneyness, to use Doug Nolan's term, that didn't exist before, came from zero, came from nowhere. The Bitcoin community, in that sense, it totally challenges the entire global currency system. And I'm just confident that you're not going to win going against the globe. I could imagine a brawl in the future where all these things play out, this bloody mess, and the Bitcoin hodlers come staggering off the field bloody and gouged and cut up, but alive.
This is Little by Little with Andy Schechtman.
Welcome back, everybody, to another episode of Little by Little. I'm very honored to have with me Professor Dave Collum. He is a professor of chemistry at Cornell University and seems like a very cool guy from the few minutes that we just chatted offline. Dave, I'm very happy to have you here. Thanks for jumping on in. What's going on with you today?
Well, I'm glad to meet you. And, I've listened to so many of your podcasts and seen so many interviews. And it's finally good to get in touch. And what's going on with me? I just left a dean's meeting to come and do your podcast.
Well, I appreciate that. Which question I'm dying to ask you that I really hadn't planned to ask you, but the more I think about it is, first of all, perhaps you are a professor of... maybe you're a professor in the wrong department. It would seem to me that the kids in the econ department would glean a lot from someone who looks at things from perhaps an Austrian or libertarian perspective. And you ever butt heads with the professors in the economics division or the economics department?
No, I don't even communicate with them. So I communicate with a ton of economists, academic economists. So, I've spent a handful of hours down at Hopkins with Steve Hanke, and for couple decades now, I've had exchanges with Stephen Roach and various players like that, and then market guys all the time. Our economists are either not on my radar or not on anyone's radar. I don't know which it is. And so, no, the answer is no, and I don't know why. Although one time some student was going to set up a panel, and they said, we're thinking of having a non-chemist. They were talking to the dean of the B school, and she thought that was a dumb idea. And she said, who are you thinking of? A non-economist. And she said, who are you thinking of? And they said, we're thinking of Dave Collum. He said, oh, that would be interesting.
It would be.
So there seems to be an awareness of the whack job across the campus.
Well, no, I think you're actually, it's the other way around. I think you're someone who thinks very logically and pragmatically. And so I just thought it would be interesting to poke on that for a little bit. I think your chemistry students would get out a lot out of learning a little economics from someone with a Austrian viewpoint. You mentioned Steve Hanke. I just did an interview with him yesterday.
It's a small world, isn't it?
Yeah, and he's a real smart guy, professor of, I think, applied economics, I believe it is, at Johns Hopkins. Anyways, my question is this. Now, some people, like Steve, argue that inflation is under control. He says that inflation, of course, is always a monetary event, an increase in the money supply, but that because of QT instead of QE, we've seen a drawdown in M2 and the money supply is being reined in, and that we will see a slowing of inflation. And I'm not sure I agree with that or not. I think he's a brilliant man, no question about it. Others like Peter Schiff say, well, inflation is just getting started, that we haven't begun to see the ramifications of all the money printing that we've seen over the last several years. So I guess my question would be this: with the Federal Reserve trying to balance inflation and this economic slowdown while debt levels and interest rates are rising to record levels, do you see a viable path forward, or are we inevitably heading to some sort of financial reckoning?
Well, to answer the last question first, I think we're heading for a reckoning. I think when your GDP is growing, inflation's a funny thing. So there's so many metrics. The CPI, of course, is garbage. The trueflation, which a lot of people turn to, I actually think is just an attempt to monetize the CPI. So someone said, let's just imitate the CPI and pretend like it's independent of the CPI and then charge people money, right? Somehow. And then you end up with Chapwood Index and shadow stats. And I think those guys might be overestimating it a little bit. I'm not positive, but their system might be maybe a little too simple. But if I were to ask you sort of what's the inflation rate relative to the CPI, what do you think the real rate's been over the last, say, 20 years? And most people would say, I don't know, 3 or 4% higher, right? And that means, therefore, there's an interesting ramification to the extent that over that period GDP grew around 2.5%. It means that we've been in a recession for 20 years. And you say, well, that can't be. That's bullshit. And I go, no, that can, just ask the British Empire. They were in a recession for about a century. And so I think that, and Peter St. Onge did an interesting analysis. I analyzed this problem this year, actually, and he came at it from a different angle where he looked at the inflationary effects of regulations, for example, and how much they cost and stuff like that. So no, I don't think inflation's under control, and I also don't think the Fed controls it. So I've decided that they've been twirling knobs, and it has had the appearance of them controlling it. But I think that's a mirage. I also don't agree with inflation's monetary. I think inflation is government spending. Now, to the extent that monetary policy and stuff and money supply responds to that, but I think they got the causality backwards. I think if you cut government in half, you'd cut the inflationary pressures way back.
Yeah, that is something that is certainly, we can argue now. Steve was the one who said it's always a monetary event,
but Steve's a currency guy, right? I mean, his lens is going to be currency, right?
Well, I understand that.
He sees everything through currency.
And there are Austrian economists who say the same thing, and I agree with you to a degree, especially in the light that government spending amounted to, I don't know, north of 30% of GDP recently, and that's far too much, no question about it. That's far too much spending, and you think about the amount of spending that we've done over the last several years, it would support that thesis. So, no, I like your fresh take on it. I like your opinion, and that's why I like doing these shows. Two friends like you and Steve, two smart guys, professors at universities, understand the same information but look at it a different way. That's what's missing in this country these days. Everyone gets so pissed off about a different opinion. I love it. And I think
Steve and I have had some long chats, one as recently as just a couple of months ago. And we agree pretty much. I think in some sense the difference is his language. I think in some sense he uses a different language than I use. I'm not going to use currency and monetary policy as much because, well, for one thing, I don't know what I'm talking about. So it's like he's speaking in French and I'm speaking in German.
I think you're just speaking a little bit more like conversation between two guys having a beer. And I think people like that. I think that's an easier way to digest things. I want to get your opinion on Bitcoin. And I also kind of want to phrase it or frame it in terms of the media. So, I was working out the other day, and when I get done or towards the end of my workout, I'll do the elliptical machine, and I'm on the elliptical machine for about a half hour, and I'm right in front of CNBC. I haven't watched CNBC in years, and I'm right in front of it on a TV, and I'm watching it, and I'm looking for gold. Gold's at this 2 days ago, it's at all-time highs, or yesterday, at all-time highs. And they have a stream ticker that goes by this way. And then underneath the stream ticker, there are boxes that spin every second or two with different indices, Dow, NASDAQ. So I'm like, okay, there's gold. And then I watch this for a little while, and then I'm like, all right, something's not right here. So there's gold, and it took 44 more turns of those boxes, which amounted to a few minutes, before gold appeared again. At the same time, Bitcoin appeared 9 times out of 44. So Bitcoin or Bitcoin futures, 9 times out of 44, gold 1 time out of 44. Now, gold's at all-time highs, and if someone would have told me at any point in my 35-year career, gold will be at almost $3,050, and CNBC completely ignores it and shines a light on something new that's barely a teenager in Bitcoin. Now, I am not a Bitcoin basher. I think the two communities are stronger when they're united, and at least in terms of not being, so divisive with one another's opinions. I think, but my point to you is this. With all that being said, what do you think about Bitcoin? And what do you think about the media's attention of Bitcoin versus virtually no attention of gold at all-time highs?
Well, let's take the second question first again. I think the Bitcoin being there is because Trump's been talking about it. So I think they're just catching the current, headlines, which we're seeing. I have not been a Bitcoin basher. I walked from it at $10. And in theory, that shouldn't make you not buy it now. But in practice, there's a serious psychological problem saying, look, it's now 90,000. Now I'll buy it. Right. But that's not my problem. My problem with Bitcoin, and I've done podcasts with almost every hodler in the entire Bitcoin universe. And I think the reason they invite me is because I don't shit all over them. I don't criticize them. I share their views. I share a lot. I'm just not sure I share the protocol by which it's going to play out. So my concerns with Bitcoin in a nutshell, and this is only my concern. So I'm not going to, spend time explaining why it could be great. It started with 3 NSA guys right away, red flag, right? So the first paper on a cryptocurrency is 3 NSA guys. If I were going to bring in CBDCs, which I don't think we have to talk about, that's authoritarianism. Right? If I was going to bring in a CBDC, one approach would be to say, look, let's release a digital currency. Let's get the smartest guys in the world, debunk it, deconvolute it, invent all sorts of networks, debug it, compile it, and get everyone used to it. And then step in and say, okay, now you've had your fun. It's over for you. We're taking it from here. Right? So the Europeans are talking about that already. And so, as is Trump for that matter, in a much more passive way. So I'd worry about that. Bitcoin has also never been through a crisis. They have been through their own micro crisis, right? Bitcoin goes down 80%. To them, it's a crisis. The rest of the world's not in a crisis. The last time we went through a real global liquidity crisis, which I think we're going to get more of because we always do, it will be fascinating to watch Bitcoin. It will be, and hopefully it won't be Schadenfreude. I mean, I support the Bitcoiners. On the other hand, it's conceivable they're cannibalizing gold's profits, but I don't care. Gold, I'm not greedy. It's been great. And by the way, my cost basis of gold starts. I was buying gold when it was $270. But I was buying it in Central Fund of Canada, which was at about 25% below NAV. So I was getting gold at about $200 an ounce. And then I bought a wad up through about $450. And then I bought a wad at $1,200 in the middle of the teens. And so my gold cost basis is great. It goes up and down. I don't care because I say, look, I'm up tenfold. Right? I don't need it. So I don't need Bitcoin. The only thing I can't afford is to make a big mistake. So they haven't been through a crisis, and we don't know when the selling gets really savage, really painful, what will happen to Bitcoin. And I think the guys who say, if the internet goes down, what are you going to do? It's like, we're all screwed if the internet goes down. So what are we all going to do? You're going to be buying guns and food with your gold at that point. And so there's that. So I worry for them that normalization is not good. So the purists like Bitcoin because it's revolutionary and autonomous of government stuff. I go, well, what I'm seeing doesn't look that autonomous, right? And so I'm not sure pure hodlers should necessarily like the fact that it's now normalized. And because as soon as they normalize, it's going to be like Goldman Sachs selling carbon credits and stuff. Now, Bitcoin, I think, in some sense, has done some damage to the risk asset markets. And the damage that it's done is it has shown fantastic gains that might be sustainable that have no tie to to revenue, no tie to earnings, no tie to cash flow. And as a consequence, it's completely numbed, let's say everyone under 40, to the idea that when you invest in, say, NVIDIA, you're supposed to be investing in their potential profits. It's not an NFT. And if it is an NFT, it's going to go to zero, right? So in some sense, Bitcoin has created a $3 trillion crypto market that also, by the way, is inflationary because it's $3 trillion of moneyness, to use Doug Nolan's term, that didn't exist before. It came from zero, came from nowhere. And the Bitcoiners say, no, it took energy. I go, yeah, fine, nothing of $3 trillion, right? And so in some sense, you've got $3 trillion worth of people running around saying, I'm now rich and I'm going to buy a yacht and it's basic. And it might be totally prudent behavior, but that money didn't exist a dozen years ago. So it's in that sense inflationary. I don't think there's any way that it will become the currency. And the reason is because if it becomes the currency, then Max and Stacy become the Rothschilds. And they're not going to let that happen. Right? So Max and Stacy, I've done a ton of podcasts with them. And I said to Stacy, I said, I'm fairly confident that you are not having trouble paying off your credit card every month at this point, right? But they're not gonna do a complete turnover of the power structure of the world to Michael Saylor and Max and Stacy. And so that somehow the Bitcoin community in that sense it totally challenges the entire global currency system. And I'm just confident that you're not going to win going against the globe. So I could imagine a brawl in the future where all these things play out. It's bloody mess. And the Bitcoin hodlers come staggering off the field, bloody and gouged and cut up, but alive. That's when I will be interested.
Yeah, I mean, it makes sense. Certainly the financialization of it, the COMEX contracts, the ETFs, and of course, MicroStrategies. I was talking to a friend of mine the other night who was doing some sort of a bond offering for MicroStrategies, a couple $2 billion, which he'll just turn around and throw right back into more Bitcoin. The leverage that they have is extraordinary. And so,
some big hodlers claim that's not true. Some big hodlers, several big ones told me, Saylor is not that leveraged. Now, I'm not qualified to question that, but I just want to throw that out there just in case, because it might be true, it might not be true.
I don't know. Everything I've seen and read would say contrary, but I'm not a big Bitcoin hodler, and nor am I, connected. I did an interview with Natalie Burnell the other day, and I'm friends with Mark Moss, and I'm open to other viewpoints, but that's about as far as it goes. Interesting take on it, and I guess if they are fighting the establishment, the road certainly would tend to be bumpy and uphill. I guess we'll see how that all plays out. What's your feeling on the banks? Are we out of the crisis that we saw in 2023? Because late last year, it was interesting. Let's see if I have the number here. I think I do. If I don't, I will be very quick with it. The amount of money that was covered by, I think this is it right here. Maybe not. No, I don't have it. I won't keep looking for it. But the amount of money that the FDIC covered to bail out Bank of Silicon Valley Bank and Signature Bank, it was billions and billions of dollars, over $100 billion, I believe. I'm almost.
And it was kind of kept out of sight too. Is that right?
Well,
my understanding, it was very covert.
Well, and it was a violation of the Dodd-Frank Act. The Dodd-Frank Act said that after the great financial crisis, if the bank fails, they'll be bailed out, or not be bailed out, they'll be bailed in. No more bailouts. And a bail-in is really the opposite of a bailout, is that the depositors are unsecured general creditors, i.e. last to be paid, and anything over the FDIC limit, to which they only have somewhere around $148 billion backing $18 trillion in deposits, that they then bail in. Their funds go, yes, and it's like bankruptcy protection. Their funds go into the bank to bail them in. Now, the interesting thing about that is that there was an inquiry by the House, and the senator from Oklahoma said to Janet Yellen, Madam Secretary, you just bailed these two banks out. It's illegal. Dodd-Frank Act says this is illegal. And she says, you're right, Senator, we did. It was a uber majority vote, she said, I believe, by myself, the FDIC, the FOMC, which is the Federal Reserve, of course, and the president. And we determined that they were too systemic, and it was an uber majority vote. And so that's why we bailed them out. But the FDIC will cover it, not the taxpayer. Yeah, right. So in any case, bottom line is
somehow, some
way. And then the senator says, well, okay, Madam Secretary, does that mean if a bank fails in Oklahoma, my constituents will be made whole? And she says, no, sir, unless it's that uber majority vote. So we bailed out the Hollywood stars like Oprah and others and the tech startups to the tune of billions and billions of dollars. And then even more quiet than those banks being illegally bailed out, in October of 2024, little flyover podunk country, Lindsay, Oklahoma, a bank fails with only 7 million in uninsured deposits, not billions upon billions, 7 million. And now the Dodd-Frank Act says anything over the $250,000 insurance needs to be bailed in, that's uninsured. They decided to give them half. When the bank was switched to Bank of Duncan, Oklahoma, the following Monday, the comment was anything over the FDIC limit, half of it will be made available, and the other half may be made available over the next 4 years if the assets of the bank exceed the liabilities. Earlier in the article, it said they didn't. And so in essence, if they do get anything back in a pro rata fashion, it's stock in the new bank. So the bottom line is you have $1 million in Lindsay, Oklahoma. You get your 250, that leaves 750. Half of that is 375. You get 6.25, that other 375 is gone. Now, not a word of this anywhere. You can find it on the FDIC website. And if you Google bank failure, Lindsay, Oklahoma, you'll find a regional Fox News channel that talks about it. Was that a trial balloon, I wonder? Because when we see the amount of leverage and uninsured deposits that the banks have right now, it's extraordinary. And I'm wondering what your thoughts are on the banks. Are we out of the woods or maybe not?
I don't think they will do anything that risks a bank run. And so whatever they do, so there's some of the theories about the Silicon Valley bailouts, the big regional bank bailouts. Some of the theories were that it was actually a takedown, right? That it was an intentional takedown. And as to who was the target, good question. But I do recall when Jamie Dimon was out there saying, by the way, your money would be safe at JP Morgan. And that struck me as about as irresponsible as you could be, unless your goal was to take out the big regional bank. And so I have a feeling this is a hostile takeover of the regional banks. I do not believe they will let something that looks like the beginnings of a run on a bank continue. And there's a famous story of there was a bus stop in front of a bank, and the bus was late, and the crowd developed, and people thought there was a run on the bank, and there was a run on the bank because the bus was late. I think they're all hot air on that stuff. I think it's designed to make it seem, and now here's where it won't be hot air. If you're in Europe, they'll let Greece go to hell in a handbasket, right? So because they can just throw them under the bus completely. But I don't think in the United States they'll do that willingly. Now, do the central banks have the power at this point? So I think the tricks that worked up until now might fail. In 08, 09, what are the estimates? $27 trillion to get the system on full life support. Inflation was here. We know it. You know it. I know it. But it wasn't headline. And as a consequence, they got away with that. Inflation is now headline. And I think that the next time they need to do that, the second it starts to show up, I think all of a sudden the inflation numbers could show up, or gold could start running like crazy, and you're going to start hearing alarms. And all of a sudden they're going to go, we can't do this. And I don't know what happens then. There was some woman on the internet who I've never seen before and she dug into the private equity game. Now, I've read Josh Rosner's and Gretchen Morgensen's book, The Plunderers. And, here's what I'll say. As long as it is profitable to take over a company, destroy it, sell the shell of a company, and make money, monetary policy is too loose. If that's a profitable business, the central bank is screwed up. It means there's too much money sloshing around. But I don't know what'll happen when inflation all of a sudden hits hard, and the central banks are going to say, "Look, we got to deal with a run and a runaway inflation," and that's relatively new to the modern. That's new to the modern era, right? And I think that's the rock and a hard place for them going forward.
Interesting. Appreciate your perspective on that. Let's switch a little bit. Let's talk about gold just a little bit. Something's going on with gold, Dave. I don't know exactly what it is. I don't profess to know exactly what it is, but it is highly unusual on many fronts. We see the central bank stacking gold at record levels. Shockingly, the United States has become a net importer of gold and silver since November. COMEX inventories are rising at rapid levels while the LBMA sees major outflows of gold and silver. The LBMA released a report just last week that said 128.5 million ounces of silver were withdrawn over the last 3 months. That's 42% of the float. Over 65 million ounces of gold have been delivered to the vaults in the United States in the last 12 weeks. There's a grasping for physical delivery that I've never seen before. You look at what's happening in London, they have 36 million ounces of gold, let's call it the float. They say they have about 280 million ounces, but of that, 36 million
available for delivery.
Is available. Right? The rest belongs to the Bank of England and ETFs. But that's standing against 380, I believe is the number, 370 million spot contract promissory notes. That's 10 times the amount of paper as is gold available. And all of this delivery has all of a sudden the market in London, which is T+1, trade day, +1 settlement. The next day you should have delivery of your metal. It should be moving.
Now it's 8 weeks.
T+8 weeks.
Yeah, right.
And so all of these things keep happening and really not much of a word by the mainstream again. They're sleeping on this. So what's your gut telling you about gold right now and the major movements that we're seeing into the U.S., which really is something I've never seen in 35 years?
Well, I've owned gold and silver for now 25, 26 years. I've seen an awful lot of stories come and go. And so I tend to wait and say until this one gets real, I'm not going to worry about it. But I must admit, it looks fascinatingly real, a good imitation of real. Here, let me ask you a first question. When COVID struck, gold quickly piled up in the United States. What caused that?
I guess people trying to, I didn't see it that way. Now, again,
if you actually look, you can see right when the lockdown occurred, there was this massive slug of gold appearing in the United States.
Well, and again, maybe it was people trying to secure as much as they could, wondering about what the supply chain would look like. I did that as a company, and when this happened, I was watching Chris Martenson, God bless him.
Honey Badger boy.
Yeah, and he alerted me to what was going on. So I told my operations, I don't care how deep we go into our line of credit, buy everything that's not nailed down and go out as far as you have to, because the supply chains were breaking. That's the only thing that would make sense to me then. And even if you see gold coming in, what we are seeing now is far surpassing anything I've ever seen. I'll give you an example, like on the March contract, or was it February? In February, we saw, what was the number? Oops, sorry. In February, we saw, let's see, I'm sorry.
It's a lot.
Well, no, it was almost 6 million ounces that was delivered, I believe was the number. It was the largest delivery that the COMEX had ever seen. I wish I had the number. It was 6 million ounces. It was the largest delivery that the COMEX had ever seen. I believe was the number. It was the largest delivery that the COMEX had ever seen. I wish I had the number. It was the largest delivery that the COMEX had ever seen. I wish I had the number. It was the largest delivery that the COMEX had ever seen. I wish I had the number. It was the largest delivery that the COMEX had ever seen. I wish I had the number. It was the largest delivery that the COMEX had ever seen. I wish I had the number. It was the largest delivery that the COMEX had ever seen. I wish I had the number. It was the largest delivery that the COMEX had ever seen. I wish I had the number. It was the largest delivery that the COMEX had ever seen. I wish I had the number. It was the largest delivery that the COMEX had ever seen. I wish I had the number. I had that number here in front of me. I can probably find it here pretty quick. But so here it is. I'm sorry. So it was 15,691 contracts stood for delivery for silver. And that was last month. That's 78.5 million ounces, the second highest in COMEX history. We're going to see close to 85 or 90 million ounces here in March.
Is there a way to know who's holding those contracts? Is there a way to track the demand?
I have no idea who's buying that, and that's the thing, we don't know. There's anonymity, and when we talk about gold, I think I'm gonna have the number right here. Yeah, here we go. No, that's not it either. Well,
so the question that keeps coming to my mind is the gold flowing from London to the COMEX could actually be an intermediary stage. And the question is, where's it going from the COMEX? And it's conceivable that because of just the idiosyncrasies of markets, that it's actually that the COMEX is where it passes through to get to, say, China.
Yeah, I think they would take a much more direct route. And
but it could be just the way contracts are written. That's the easiest way to do it. I don't know. I'm just guessing.
Well,
this is a wild guess. I mean, this is a wild guess.
I guess it's in theory. I don't know how it would flow. I would think it would go directly to China. And there is a COMEX contract, however, that does go to Hong Kong, to Brink's Hong Kong.
But what if China and or Hong Kong had contracts at the COMEX, and then they call for delivery?
Well, and that would
therefore they would say, "Oh shit, London, send us some gold." So I'm just wondering if the COMEX is really the end part of the story, or if it's
have a hard time believing that, but I guess I'm not knowledgeable enough on the COMEX ecosystem to be able to give you that answer.
I don't either. I was hoping you did.
Direct enough to me, but it is possible, I would think. So in any case, you would think what they would do at that point is just exchange for physical and have it sent directly to.
Well, let's say the reverse were true. Let's say China had contracts with the LBMA, and all of a sudden gold started flowing from the COMEX to London, and we'd be going, "What's going on there?" And it would still be the same story.
Yeah, I guess it is possible. In February, 52,296 contracts stood for delivery.
These are big numbers, is my understanding.
5,929,600 ounces. You put that into your computer at 3,000 an ounce, and it goes E, or at least on your calculator on your phone.
So who breaks first, LBMA or COMEX?
Well, it appears as though it would be the LBMA. It's massive stress. Certainly massive stress. They have, and in silver, they have roughly 270 million ounces, they call it, the float of the 800 million they hold, or just under, most belonging to the ETFs, which, by the way, JP Morgan is the primary custodian of both SLV and now GLD. They just took over primary.
Yeah, no, I don't trust any of those ETFs.
Of course, neither do I. But, in silver, they're trading 2.9 billion ounces of silver per day, 3.5 times annual global mine supply, over 10 times the amount of silver. So when they just saw 40% of their float leave the LBMA vaults in the last 3 months, and yet they still have all of these naked short positions. So
are they true naked shorts?
Yeah, they are.
The formal definition of naked short?
It's a contract that is written with no silver or gold behind it, a short contract.
So it's a naked short.
Yes. And so with all of this stuff happening, I would guess there is great strain being put. And then you just saw over the weekend, the COMEX delist a handful of LBMA futures contracts.
I saw that, and I didn't know what to make of it.
Well, there are some people like Craig Hemke, who I respect a ton. He's a genius. I love the guy. He says it's not that big of a deal because it's just contracts that had low volume, low demand. I tend to think otherwise. It seems to me a shot across the bow, and separating perhaps themselves, the Western here in the United States, bullion banks, distancing themselves from the inability to deliver, the liquidity issues that we see there. This has the makings of something rather interesting. I guess we'll see. But when you go from T+1 to T+8 weeks and say it's an issue of...
that's a problem.
Well,
That's
they say it's an issue
real.
of lack of trucks and manpower. You're telling me the Bank of England can't come up with some more trucks and some more people to load the trucks after they've delivered all this stuff over the last, 4 or 5 months? Something is not good. But I do have a take on it, and it centers around this lady. And Judy Shelton.
Oh, yeah. I've been watching Shelton. I've been watching Shelton interview. In fact, I might have watched the one you did with her.
And she told me flat out, she was, for those who don't know, she was Trump's nominee to run the Fed in 2016. Wasn't confirmed because of partisan politics, but she's a brilliant, brilliant economist, and she's also very much an Austrian economist, much of a libertarian. You two would have, I think, a lot to talk about. And she said to me, I've had discussions with Trump. We talked a lot about it in the first administration about pegging U.S. treasuries to gold, because net since 2014, we've hardly seen one treasury sold to central banks. They bought them, but there's been more selling than buying.
Now, what does it mean to peg a treasury to gold?
What she is basically saying is issuing a 50-year treasury that is collared by and redeemable in gold.
At any point or at the end of 50 years?
At the end of 50 years. She also said she would hope to issue stable coins off of those, or that industry, the industry would issue stable coins off the treasuries to give more demand. And the stable coin industry largely right now, like Tether and USDC as an example, are almost 100% US dollars and mostly treasuries backing it. So these stable coins are supporting the legacy system.
I wouldn't buy anything that promised me something in 50 years.
Yeah, well, I understand that. She does talk about in her book other durations as well. But she flat out said to me, Andy, on July 4th, 2026, I believe he will issue them a gold-backed treasury. Now, I don't know what the duration will be, but she said that's the 250th anniversary of the country, and she believes he'll do it based upon discussions they've had. So if you were going to do that, the first thing to do would be to onshore all the gold, to reshore it, and get your house in order if you have till next July. Let the price rise, because it needs to obviously be higher when you talk about reintroducing it, maybe to some degree, into this type of monetary system. I said to her, Judy, this was 2-3 months ago. Why hasn't gold been audited at Fort Knox and New York Fed and West Point Mint in Denver? And she said, it's a horrible answer they always give us. This is before Elon was talking about it. She said, too much money and logistics are challenging. She said, we're the United States, for goodness sake. Let's just get it done. Spend a few $million. I said, I agree. I said, Judy, do you know that gold is held in an account called the Gold Revaluation Account? And she says, yes, I do. And I said, you can't make that up. It's valued at $42.22 here in the U.S., $35 an ounce through all of Western Europe, the old Bretton Woods price. The head of the Dutch National Bank has been screaming about this. Let's revalue gold to offset the liabilities on our balance sheet, as have members of the Bundesbank. Same thing, Germany. And
now again, I've not been able to get a good answer to this question. When they say revalue gold, do they mean revalue gold to the market price of $3,000?
Well, and I'll get to that in one moment. Cynthia Loomis, the senator from Wyoming, is advocating the same thing to fund this strategic Bitcoin account. Revalue gold held in the Gold Revaluation Account. Now, let's go back and say when Roosevelt, over my shoulder there, confiscated gold, that's his executive order he used. Gold was $20 an ounce. He paid everyone $20.67. With eggs being, a dozen eggs being a nickel, 67 cents is a lot of money. So people were happy with that. Then he immediately devalued the dollar by 40%, making gold $35 an ounce. When Nixon closed the gold window at $35 an ounce in 1970 and 71, in 71, in 72, he revalued gold from 35 to 38, and then in 73 from 38 to 42.22, where it stayed. Now, if we revalue gold to market to market, what in essence happens is that the Treasury issues these gold certificates to the Federal Reserve, who then gives the Treasury money for them. It's not a claim on the gold, as some people think. It's a claim on fiat currency. It's just
it seems completely fictional to me.
It's an accounting gimmick. And what's interesting about it is that if we marked it to market, you're at about 800 billion. But there are guys like James Rickards who was talking about a 40% gold backing. Why would he say that? Because the Swiss used to have a 40% gold backing, as did the United States. There was an act sometime in the 50s, forgot the year, but it changed it from 100% gold backing, the old Bretton Woods number, to 40%. The BRICS nations, who Dilma Rousseff, the former president of Brazil and the head of the BRICS New Development Bank, just came out a couple months ago and said the BRICS have agreed in principle to a settlement currency called the unit, 40% gold-backed deliverable to central banks on demand. This 40% number is somewhat interesting. James Rickards is talking, I believe he thought $12,000 an ounce would be the number that he would take, the broadest measure of the money supply, take 40% of it, divide it into the gold, which hasn't been audited, that's held in the gold revaluation account, and you come up with about $12,000. Now, if they revalued it to $12,000, which would really benefit the central banks who have been the ones buying it all these years, last several years, that would give $3 trillion free and clear to the Treasury General account, and then they can do what they want with it.
Well, okay, so you've got $3 trillion worth of gold. Does that mean you're willing to sell it?
No, so they don't have to sell it, because remember,
that's the part I don't understand.
The Federal Reserve gives them $3 trillion. It's just like an infusion of cash. They don't need to sell the gold, and the Fed
they don't need any. They don't need gold to do that, as proven by all the QE crap.
Well, that's what pisses everyone off. That's why people are dumping treasuries and buying gold.
It seems like a total sleight of hand to me.
It is, but everything.
So here's what I would say. What's the difference between revaluing the gold when you're not going to sell it, than say revaluing Yosemite National Park at $3 trillion?
Well, you could, but the difference is that they would probably make a decree that any country or entity that wants to sell gold to the Treasury, would be my guess, that this is what they would pay for. It would become the market price. So if they revalue it to 12,000, they're saying we will print money to buy gold at 12,000 an ounce. That's correct. More or less what it says.
That seems backwards to me.
I understand. The whole thing is backwards.
So I simply don't understand. To me, when you're on a gold standard and you've got debts that are denominated in dollars but payable in gold, then it makes sense. So when Roosevelt takes in the gold at 20 and ups it to 35, then what you can do is you say, let's say the U.S. owes $1 billion. You can now calculate the number of ounces of gold you can pay off that debt with.
Now they're going to do it. That's right. But now they would do it in terms of treasuries that would be redeemable in gold at that number.
But they're not, but if they're redeemable in gold, then you're saying they're willing to sell the gold, and I'm not convinced they're willing to sell the gold.
Well, and if they are 50-year treasuries, they got some time. I don't know. That's just a
50-year promise is
well, and that's what most people react to this. I guess
so. If it's a 2-year treasury, or something, then I got it.
Right. Well, and maybe that has something to do with all the gold coming back here. Who knows? That's what I mean by when I say I don't know what they're doing, but gold is the only other tier 1 reserve asset. We are now a net importer. We are seeing massive inflows. We are seeing people, including U.S. senators, talk about revaluing the price of gold held in the gold revaluation account, including members of the Bundesbank and the Dutch National Bank. So things are changing for sure. We are seeing the LBMA literally being bled dry and changing the rules of delivery in mainstream. All of these things keep happening. So I guess my question is, with all of this being said, do you think that gold is being reintroduced into the monetary system, perhaps backing treasuries or something similar to it as Julie is advocating for, or not? Do you think gold will not find its way back in as a backing of some form of new system, maybe even tied to blockchain technology?
You can't use something to back it unless you're willing to forfeit that thing. So if I take a loan out on my car to buy a car, the critical backing of the loan is they'll come and take my car.
Well, and what you are just explaining right now is the problem on the LBMA. You can't have physical delivery when you create infinite amounts of paper.
That's right.
You can until people stand for delivery.
So I think all of this, my hunch would be that somewhere else in the world, they're planning on backing a currency with gold. And that would be the BRICS. That would be, and then I was doing an interview with Michelle Macquarie, which gets a lot of clicks. I think it has nothing to do with the content. The content helps, but Michelle helps. And she mentioned something about the BRICS meeting and how important this meeting was. And I said, well, do you remember where it was? And she said, yeah, Russia. And I said, so we've demonized Russia with every ounce of our being. And 25 countries just met in Russia to talk about alliances. So in my conversation with Hanke, the most recent one, I said, Steve, tell me this. My understanding is the BRICS is not about a currency. It's about a complete shift in global alliances. And he says, absolutely. So here's a currency guy saying it's not currency, right? So the BRICS are a bunch of guys saying, we're no longer with the Americans. We're with China. We're with Russia. We're with Saudi Arabia. We're with, and that to me is a profound moment in history.
Of course it is. And they're talking now of a common settlement currency, not a unified currency for settling. And the thing that really aggravated, and this is why I believe we're not hearing so much about the BRICS these days, other than Indonesia, who has the largest in-ground deposits of nickel on the planet. They just became full members. Is because the Bank of International Settlements, their innovation hub, had been working with China, Hong Kong, Thailand, and the UAE, who developed mBridge, which is the cross-border payment system where the unit trades over. And this was all announced at the meeting not in Novigrad, but the one, or was in Novigrad, not the one that you're speaking of, the big one, the summit. I forgot the name of the town, the city they were in. But anyways, the point of it is that they've been working with them for 4 years developing this Chinese technology, the BIS Innovation Hub. And I thought it was interesting at that meeting, they came out and said, yeah, we want to align with the BIS, the IMF, the United Nations, the WHO. We just want the rules rewritten so it's more fair. I found it interesting that they were saying they want to integrate into the Western system with mBridge. And then at the 12th hour, Augustus Carstens, who is the chairman on his way out of the BIS, the most powerful bank in the world, he says, the Bank of International Settlements is pulling out of this arrangement. We're scrapping it. After 4 years, it was operational. They were doing trades over it. We're pulling out because the BIS can't be involved with any country that's being sanctioned by the West. It's as if Augustus, this genius, after 4 years, just realized that Russia was the R in BRICS. And so they scrapped it. And so I think it really upset. And it was Michelle Macquarie, who's a very good friend of mine, said to me in an interview I was doing with her, but Andy, isn't the BIS a Western institution? I'm thinking about, you're right. When I was talking about this, about the BIS being behind it, and then a couple of weeks later, right after she said that to me, they pull out. And I think it infuriated the BRICS, and it infuriated them so that what they're going to do now in terms of continuing to accumulate gold and shed treasuries and do the things you're speaking of, and thinking of a common settlement currency, which the whole premise of the unit was to trade local currencies and settle in gold, in essence.
And to avoid the SWIFT banking system and sanctions. And the biggest mistake we made, geopolitical mistake, and we've made a bunch, but one of the biggest was weaponizing the dollar. And Putin said it brilliantly. He said, you want to be the reserve currency and you weaponize the dollar. That was stupid.
And that's what this is all about. And I think it's an interesting point. And I do think that of all the interviews I've done and all the thought I've given about this, you might be the first one who's actually challenged me to think, could this be where is this metal actually going? Is it going to stay here in the COMEX? Is it going to leave the COMEX? And if it does leave, where would it be going? And
well, if it's flooding into the COMEX, there's someone who's trying to get it out of the COMEX, right? We got to assume that.
Well, not a ton of it. Some of it is left, not all of it. Almost all the gold that's been sent to the COMEX has been delivered. To
right.
whom we don't know. And delivery doesn't mean leaving. So it would have to leave the COMEX ecosystem to be different. In the delivered category or in the eligible category, it's not for sale.
If I'm a brick, I'm yanking it.
Yeah, of course. And that's really the whole premise of what I've talked about for 4 years, that they are using the suppression against us by standing for delivery slowly all around the globe. You're a fascinating guy. You have interesting takes on all of this. And that's the part I like about having, having an open mind and talking about these things. All right, let's end on a positive note.
Good luck.
Yeah, I like you, man. I'd like to sit down and have a couple beers with you and talk life. If you're ever in the Southern Florida area, please look me up.
I used to go there all the time.
Well, I'm in Delray Beach, and if you're ever anywhere near here, please let me know. So despite all the challenges in the global economy, and there seems to be a lot, and all of the challenges, not just economics. What gives you, and you're educating our children. What gives you the most optimism about the future?
Well, the United States has great resources. Let's start there. And I have to ignore all the pessimism that I have. I have to leap over gigantic chasms of pessimism. I don't believe we can get to the promised land from here without going through the valley of death, period. I don't see a way out. Our equity markets are 200% over historical average valuation. That has to be wrung out. And I don't care what Trump does. And I'm wildly enthusiastic about what Trump's done. I am concerned about some of the things he's done that I think, oh, wait a minute, there's some shenanigans going on here. I don't trust this at all. I believe that the most we can hope to get out of him is a good start. Now, I don't think that at the end of 2 years, pessimistically, or 4 years optimistically, I don't think he can do the changes that's going to turn us into immediately into a new bull market. One of the scariest things is from the last four decades, we've had a phenomenal run. And the basis of it is tailwind after tailwind after tailwind after tailwind that all work. Demographic, dropping interest rates. And what it created was a asset markets that whose valuation, which should just wobble around, not trend. The valuation of an equity market shouldn't trend, because if it gets really high valuation, then its return sucks. So it should just flop around in a channel for 100 years. It did. And then starting in around 1981, the equity market valuations compounded 4% a year. We are not going to do that again. In fact, what we are going to do is we're going to compound negative 4%. And I don't know when and how, and I don't know why, what path. But I've never seen an asset market go from profoundly expensive that didn't find its way back to cheap. And so that's the valley of death. We got to ring out 200%, and 200% does not ring out by a single crash. It does not ring out by growth. It rings out by a serious, grinding, painful secular bear market. That's how you get rid of 200%.
Yeah, you wonder how close we are to that with the.
I think we're within minutes of. I think we've started.
The hedge funds, their exposure to the Mag 7 is at a 2-year low, and the insiders are dumping stocks at a 6-to-1 ratio of sell to buy.
But these are short-term indicators. So when I see someone show me a chart that's a year old, or 2 years old, or 4 years old, even 10 years old, I don't care. I want to see a 100-year chart. And if you don't show me, and if it's not inflation adjusted, I don't care about it, right? There's just a million things that are a problem. We don't have anyone on Wall Street who knows what it's like to muscle their way through a secular bear market. And for them, it's in the history books, and they didn't read them. And so we've got an entire generation running the operation who thinks that everything's an NFT. And so we are going to have to wring that out, and it's going to be repeated beatings. Nikkei style, 67 to 81, 29 to, 1929. If you go from 1929 price, inflation adjusted, we were at the same price in 92. So if you own the top, you're going to your grave. Now, you might go to your grave up because the path is not known. But sometime in your lifetime, you could be a youngster, in your lifetime, you'll end up back at that same price if you own the top.
And to your point, when I started in this industry in 1989, 1990, the Nikkei was 40,000. And it's over all of this time, 35 years, it touched it for a second, and now it's back down again. For 1 second, a few months ago, it touched it.
The gruesome tweet that I put out there is, wouldn't it be cool, I showed a picture of it, if this was a double top?
Yeah, I mean, yeah. Yeah. Well, as the Chinese curse says, may you live in interesting times. You are a
That's right.
fascinating guy, Dave. How can, and I have to have you back on again. And I don't say this as disrespect to anyone I've had on my show. I think I may have enjoyed this conversation and just your insight as much as any I've done in the year that I've been doing my own interviews. Thank you for being, thank you for being so cool. I mean, if there are parents who are sending kids to your university watching this right now and saying, man, you're going to take chemistry, Johnny or Sally, that'd be the first class I'd sign up for. You're a cool guy. How can people find out more about you?
Well, I have a Twitter account at David B. Collum. By the way, Cornell's a brilliant institution. I have nothing but great things to say about Cornell. So you can read all you want in the newspapers about how bad universities are and stuff like that. Cornell, I think, is a phenomenal institution. Now, I can be found at David B. Collum. My pinned tweet is my annual year in review, which I've been writing for about 15 years now, it turns out. It started small. It's now 200 or 300 pages. Bob Moriarty, of all people, and his team have been now annually putting together a book form. Now, it's free at Peak Prosperity. You can buy the book form on Amazon for $20. There's a bit of an IQ test going on here, right? But if you want it in the book form, and they do a better job of formatting than I did, you can get it at Amazon. And think of it as a Patreon donation if you want. But I think I'll sell 100 copies, right? Because you don't put out a year in review in book form 3 months after the year's over, right? But in any event, it's there, and it just got released, and some people want to buy it. I sold probably 350 or 400 of them last year, so
Well, you're a smart guy. I think you can learn a lot from a guy like you, regardless of the
it's irreverent too. It's irreverent. It's intended to be funny. It's intended to go way outside the box. I realize that I try to write about the things that other people are not writing about.
Well, that's the best kind of information to read to broaden your understanding. You don't have to read the same stuff over and over again to reinforce your own thinking. Dave, I enjoyed the heck out of this, man, and I promise you'll hear from me again. I'd love to do it again, and if you're ever down this way, that first dinner and a couple beers are on me. So thanks for jumping on, and look forward to doing it with you again real soon.
You betcha. Love the chats. You want to record them? That's okay too.
Right on. Sounds good.
Little by Little with Andy Schechtman.